Welcome to the Explainer. Today, we're unpacking the Q2 2026 market data to really get a handle on Ethereum's complex journey toward institutional maturity. Look, if you've been following the ecosystem, you know there's just a ton of noise out there right now. So we're going to cut right through all that and look strictly at the data. We're focusing on three huge things today: price stability, layer 2 growth, and real-deal institutional adoption. Let's get right into it. So let's start with the core question driving today's explainer. Has Ethereum finally bridged the gap to traditional finance? I mean, this single question totally highlights the immense tension we're seeing right now between rapid technological adoption on the network and broader traditional market forces. Are we just looking at an isolated crypto ecosystem, or are we literally witnessing the plumbing of a brand new integrated financial system? Well, the data from this quarter paints a pretty revealing picture. Okay, here's our agenda for today's breakdown. First, Q2 price and market volatility. Second, layer 2 and ecosystem growth. Third, adoption and developer activity. Fourth, risks and network competitors. And lastly, future outlook and ETFs. All right, starting off with section 1, Q2 price and market volatility. The data from Q2 shows us that Ethereum had some highly defined price action. It traded strictly within the $2,800 to $3,400 range throughout the entire quarter. Now, for a market historically known for massive, unpredictable swings, this relatively tight band tells a real story of consolidation. Buyers and sellers were basically finding an equilibrium within this $600 window, really holding the line despite some broader macroeconomic pressures. But, however steady that range might appear on paper, market volatility definitely spiked in direct response to the ongoing U.S. regulatory hearings regarding crypto ETFs. You know how it goes. Whenever traditional regulatory bodies hold hearings on integrating crypto assets into standard exchange-traded funds, the market is gonna react. Now, we're not endorsing any specific regulatory outcome here. We're just looking impartially at the facts, but the data clearly shows that Washington's conversations had a direct, measurable impact on the volatility within that trading range. Moving right along to section 2, layer 2 and ecosystem growth. Okay, this brilliantly illustrates the network's scaling success. Layer 2 scaling solutions, specifically Arbitrum and Optimism, saw a massive 40% jump in daily transactions. 40%! This is incredibly significant because it absolutely proves that the off-chain scaling strategy is working, and it's successfully absorbing all that growing network demand. But check this out. The growth isn't just coming from everyday retail users. This milestone confirms something much, much larger. Traditional finance, specifically major European banks, are actively testing Ethereum smart contracts for their own internal settlements. I mean, this is a massive piece of data. When legacy banking institutions start utilizing smart contracts on this network to actually clear and settle their client transactions, that marks a profound shift. It directly answers that question we posed at the very beginning about bridging the gap to traditional finance. All right, section 3, adoption and developer activity. So, the builders working in the background, they remain highly active, marked by a solid 12% increase in GitHub commits for Ethereum Core during this quarter. Actually, this 12% jump is a fantastic metric for the overall health of the ecosystem. It shows us that despite any regulatory noise or stagnant price ranges, the human capital, the developers themselves, are just heads down, continually shipping improvements and refining the protocol. So you might be wondering, what exactly are these developers building? Well, based on the data, they've focused heavily on improving proof-of-stake efficiency alongside establishing cross-chain interoperability. In other words, they are actively working to connect isolated networks to make the entire digital asset landscape way more cohesive and fluid. Which brings us to section 4, risks and network competitors. The data clearly shows that Ethereum is absolutely not operating in a vacuum. It's currently facing rising, direct competition in the DeFi space from alternative networks like Solana and Avalanche. As these competing chains offer their own high-speed or low-cost environments, they're naturally vying for the exact same developer mindshare and total value locked. Make no mistake, Ethereum's dominance in DeFi is being actively tested by these highly capable rivals. And it's not just external competition either. There are internal architectural challenges to navigate as well. There are growing structural concerns highlighted in the quarter's data regarding the energy usage, specifically tied to those expanding layer 2 rollups we talked about earlier. While Ethereum itself drastically reduced its energy consumption by moving to proof-of-stake, the data points out that the operational demands of the layer 2 networks, which are growing transactions by 40%, remember, are sparking some very real new conversations about long-term energy sustainability within the broader rollup ecosystem.
Let's wrap things up with Section 5, Future Outlook and ETFs.
When synthesizing all these market inputs, analysts have really zeroed in on a specific metric. Despite the earlier volatility tied to those regulatory hearings, market analysts actually expect Ethereum to find price stability around the $3,200 mark by the end of Q2. This target reflects a real balancing act. It's factoring in the robust Layer 2 transaction growth and the active development, while simultaneously weighing it against the competitive pressures from other chains and that ongoing regulatory scrutiny. So the absolutely crucial point here is that the network's long-term trajectory ultimately hinges on two major pillars: broader institutional adoption and the potential approval of ETH ETFs. The data strongly suggests that breaking out of these current stabilization patterns will require these traditional finance gateways to fully open. Think about it. If European banks testing smart contracts scales up, and if US regulatory bodies do approve ETH exchange-traded funds, that right there acts as the core engine for the next massive phase of growth. Which brings us right back to the provocative thought we started with. Considering the concrete European banking tests for settlements, the massive 40% scaling on Layer 2s, and those pivotal ETF regulatory hearings we covered in this explainer, we leave you to ponder this. Has the true institutional era of Ethereum officially started? The data is certainly pointing toward a totally fascinating convergence between decentralized tech and traditional finance. Thank you so much for joining me to unpack these Q2 2026 numbers, and I highly encourage you to keep a close eye on how these specific trends evolve in the coming months.